Welcome back to markets. Today it was a bad day if you were a bull on the markets. The big indices have lost nearly 2%, 1.8, 1.9 to be precise, and the mid-cap index also lost 1.3%. The market suffered from a triple whammy, if you please. There was global growth scare, there was a big fall in China, there was bad earnings to contend with over the weekend in India itself, and there was a fear that the government might go after participatory notes, those derivative instruments through which some foreign investors invest in India. Well, that was the story for the day, but let's get a technical perspective on the day's proceedings as well as what we will get tomorrow. Sudarshan Sukhani joins us. Sudarshan, what did you make of the day and what's the strategy for tomorrow?
Good evening. Markets went through a mini bear phase today, opening with a gap down, but the gap down was not bought into. In fact, further selling has taken the Nifty almost towards 8350. It has been our view that we are in an intermediate downtrend with a lot of choppy conditions in between. That view is likely to remain so. The chances are that eventually Nifty should go below 8,000. But in that process, we are going to see wide fluctuations. The markets have fallen today, for example, fallen for the last 3 days. It is also possible that we will see similar strong and sudden rallies on the upside. It may not be a one-sided decline, but the theme is that intermediate positional traders should stay on the short side of the market, while short-term traders should be prepared to accept that choppiness and volatility and trade on either side.
All right, Sudarshan, so that's the overall call on the market. What about individual stocks? Any ideas for tomorrow?
For tomorrow, for professional traders, we suggest going short in Voltas. Voltas has been in a strong bull market of its own. That bull market may be coming to a pause. It went through a process of distribution, has broken down on the downside from that distribution, is giving us lower highs, lower lows, all the signs of a strong and sharp correction or even a mini bear market. So for professional traders, look to sell Voltas, which is just breaking down from a small trading range. Keep your stop losses because markets are volatile and take profits whenever you get them.
All right, that's useful advice. Thanks a lot, Sudarshan, for joining us. Well, after State Bank of India, it's now the country's largest private sector lender, ICICI Bank, that has put its or several of its NPAs on the block. CNBC TV 18's Ritu Singh, who broke the story for us, is joining in with all those details. Ritu, this raises the larger issue of banks finally stepping up on the gas to stem the rot.
Well, this is one of the largest NPA sales undertaken by a private sector bank in the recent times. Remember, ICICI Bank's bad loans had shot up to almost a 2-year high in the March quarter, and the bank is moving really swiftly to clean up its balance sheet. So we understand from sources that it has put NPAs worth over 1,000 crores in the block to recover those dues. And these include two large accounts, which is Tulip Telecom and Falcon Tires. Now, the bank has an exposure of about 700 crores to Tulip Telecom and 300 crore to Falcon Tires. And it has now put these accounts on the block because it does not see much recovery coming in there. It has also invited bids from the country's 5 largest asset reconstruction companies. Those include Arcel, Edelweiss, JM Financial, Phoenix ARC, as well as International ARC. And these bids are expected to come in by the end of the month. Now remember, both of these accounts have been notorious. Tulip Telecom, for one, had gone for a CDR and failed. Its CMD was arrested in a service tax evasion scam. Similarly, the Pawan Kumar Roya controlled Falcon Tires too had a similar default post, which the lender ICICI Bank had converted some of the pledged shares of the company and thrown out the promoters. So both of these accounts had been showing a lot of difficulties, and ICICI Bank has taken the step to really cut off these bad loans and sell them to ARCs. We wrote to the bank for their comments on this story, but they haven't responded as of now.
All right, Ritu, thank you so much for those exclusive details. Moving on now, a number of other stocks were also buzzing around in trade. Let's go across to Mangalam Malu for a quick wrap. Mangalam.
So thanks a lot for that. We'll start with stocks like Lumax and Srikalahasti Pipes. Both of them locked in upper circuit after a good set of numbers that they posted over the weekend. But from the numbers that came in today, MRF had a strong operational performance where the EBITDA grew by 66%. The margins also expanded 23% from 15%, and the net profit nearly doubled. However, when the management spoke to CNBC TV 18, they sounded a bit cautious. They said they won't be able to sustain margins at these levels, and also going forward for the whole industry in the next couple of quarters, the top line growth may be a little flat. No such problems for Geometric Software, though. That stock grew by about 12% today after their dollar revenue came in higher by 9% at close to that $47 million mark, and also the margins expanded, nearly doubled at 8.6% from 4%. Info Edge, on the other hand, had a weak quarter. The EBITDA margins contracted from 33.5% to close to that 14%. The management spoke to CNBC TV 18 and they identified 99 acres as the main culprit, because that one lost about 35 crores on the profit before tax level. Century Textiles also had a weak quarter. They posted a net loss of 29 crores versus a net profit of 66.5 crores. The main culprit on that one was the cement business, the EBIT of which came down to 46 crores from 96 crores last year. And ahead of earnings, we are looking at Punjab National Bank and Bank of India, both of them lost in trade. However, small companies like V2 Retail and ZF Searing, both of them gained in trade ahead of numbers tomorrow. With that, back to you.
Thanks a lot for that, Manglam. Isn't that small comfort on a day like this? In any case, thank you very much for joining us, and with that, we wind up this edition of Markets Today.
Have a great evening.